There's been a lot of stories this year about the economy and the market, but none bigger than inflation. Inflation has been in hiatus really for the last 4 decades, since Paul Volcker, back in the 80s as the chairman of the Fed, really sought to crush inflation. And we've been in a period of falling inflation ever since, so for the last 4 decades, really up until about a year ago, when inflation has reappeared, and it's back to levels last seen in the 1980s. And so why? What caused that? Well, the pandemic, if we push back to, or rewind back to the pandemic, had a huge impact both on the supply side and the demand side of the economy. On the supply side, businesses and manufacturers weren't able to produce the goods and services that they had been producing. On the demand side, many people had lost their job or weren't going out and doing the things they had been doing, and so demand also came way down. The Federal Reserve, as well as Congress, implemented tremendous amounts of stimulus, and that helped to bring demand back, but it really wasn't able to do a lot to help supply. And so that is a classic definition of inflation. When you have too much money chasing too few goods and services, prices go up, and that's what we've seen. Now, where do we go from here? We are seeing supply starting to improve. One of the bottlenecks that came about during the pandemic was the congestion of ships at ports as they sought to unload their cargo to bring it into the United States. And take a look at this chart, and you can just see this reflects the number of ships that were waiting on the West Coast to unload their cargo, and that number really spiked up until the beginning of this year. But we're seeing that come down. It's come down tremendously, and so that's an improvement on the supply side. Similarly, the price of a container to ship goods, that price spiked during the pandemic. But we also are seeing those prices come down tremendously as well. So supply does seem to be improving. On the demand side, the Federal Reserve has been very aggressive in raising interest rates. Take a look at this chart. And this chart shows the Federal Reserve's height-raking cycles going back to the 1980s. You can see that this cycle in blue, the Federal Reserve has raised rates at the fastest pace going back to 1980. And so we do expect that that's going to slow the economy. It's going to make it more expensive for purchasing things like homes or cars. We are seeing a slowdown in those markets, and for businesses as well to expand. So we expect that the combination of improvements on the supply side, as well as actions that the Federal Reserve is taking to bring down demand, will bring inflation lower. Maybe not back to the levels, the ultra-low inflation levels we had for much of the past decade, but we do expect inflation to improve, and we expect to see that here in the coming months and quarters.